We're joined by management. InfoEdge just reported its earnings, and it was a decent show because the revenue jumped up quite a bit, almost a 12% growth coming in on a standalone basis, and overall the billings for the company has also increased by around 5%. Hitesh Oberoi, the MD and CEO of InfoEdge, joins us on the show now. Hitesh, hi, good to have you on board. Let's begin by discussing the IT hirings because that has been the pain point, and the IT hirings were something that were impacting your billings. What's the latest you see on the ground? Any improvement or status quo?
No, IT hiring, like you said, has been slow for the last 3 quarters now. And we are not seeing much change on the ground at the moment. We are hoping that things will start getting better a couple of months from now because companies had hired, more than their requirements last year. And slowly, because of attrition, they've been losing people. And hopefully there will come a point in time when they have to start hiring once again. So we are expecting that to happen 3-4 months from now, but fingers crossed on that one.
About the IT hiring, not looking too good right now, but overall the non-IT hiring and the overall, if you can give me the number of Naukri billings, because I don't think we have those presentation details yet. If you can help me with the number.
Yeah, so the non-IT market, hiring market continues to be buoyant. About half our revenue comes from non-IT hiring. So sectors like real estate, construction, telecom, hospitality, travel, tourism, healthcare, these have been doing well for us. Banking, financial services, insurance. We continue to see strong growth on the hiring front in these sort of segments. But like I said, the IT market has been hit, and it's been hit hard. Early signs, in some cases, we are seeing some sort of a recovery, but very, very early. So can't say whether this is going to last and whether things will get better going forward. The Naukri business, the overall recruitment business has been sort of flattish for us this quarter.
99 acres side, we have been seeing that the losses are continuously reducing, but how is the competitive intensity that you're seeing? Is it still very high, or has there been any kind of slowdown when it, in fact, a reduction in competitive intensity?
In 99 acres?
Yeah.
No, the real estate market has been doing well. We have been executing well. We've seen strong growth in our real estate business for almost 7 quarters now. And our losses have also reduced significantly. Competitive intensity continues to be high, but our team is executing well. We actually generated a small cash profit this quarter in 99 acres. But fingers crossed on how things will play out going forward. Right now, it looks solid. And, the real estate market, as you know, was down for many years. And we've seen some sort of a recovery for the last almost 7-8 quarters now. Prices are high, inventory is low, new launches are selling. So right now, things look rosy, and, we are happy with our performance, but fingers crossed.
And I think there is some improvement as far as JanSat is concerned as well. The traffic seems to be inching higher. Can you talk to me about what are you doing there to seek this kind of improvement? Are you investing a lot more in terms of your marketing spends? Because that too had been inching higher.
Actually, in JanSat also, we changed our strategy about a year ago. We moved to a freemium model. And as a result, our revenues took a hit for about 4 quarters. We saw a 30% decline in top line because we moved to a freemium model. But what the freemium model has helped us do is gain traffic share. And we are sort of a very strong player now in the north. And now we are at a point where we think we can focus a lot more on monetization. Because we are now on a freemium model, we are not actually spending as much money on marketing as we were earlier. In fact, our marketing spend is down almost 40-45% compared to a year ago. And now we are working hard on getting the monetization on our platform up. So again, we are happy with the performance in JanSat this year. We've cut burn by almost 50%. And we are working hard on getting our revenue growth back on track. Let's see what happens going forward.
Overall, at the company level, what would you say is the trajectory for margins that we should expect? Because, okay, for JanSat, the spends have been coming down for marketing. But for the overall business, what should we expect in terms of margins going forward?
A lot will depend on what happens to IT hiring because that's a big part of our revenue. In Naukri, and Naukri is of course 70-80% of our business, and all our money is made in Naukri. If IT hiring bounces back by Q4, then it's a very different scenario. On the other hand, IT continues to be stressed for the next 2-3 quarters, then things will look very different. We don't want to slow down on our investments, in 99 acres. We want to continue investing in our Naukri business from a long-term standpoint. So we don't want to really manage margins in the short term, and therefore a lot will depend on what happens to top line growth. Our investment will continue.
Coming back to 99 acres, in the previous quarter, we had seen some moderation in the realization front. Has that improved in the second quarter?
So we're not seeing any pressure on pricing. It's just that companies are hiring a lot less than earlier. Attrition rates in most IT companies, which were at maybe about 20% levels, 22% levels about a year ago, are now down to 13, 14%. The starter market has also been very badly hit. So that's resulting in lower volumes more than anything else. Pricing has not really been under pressure. Of course, in a slow market, you end up giving a couple of percentage points of extra discount. But that, will come back when the market bounces back.
The question was on 99 acres. Last quarter, we had seen a moderation in the realizations. So has that improved? And how has been the user addition as well in the second quarter?
Actually, 99 acres is firing on all fronts. Our broker business is doing very well. So we've added a lot of new customers, and our ARPUs are also improving. The builder business continues to be under a little bit of pressure because here we need to get our product right. We're working hard on that one. Maybe another 6 months before we get that business back on track. But on the broker side and on the owner side, the business continues to execute excellently, and we are seeing both an increase in ARPUs and increase in customer base.
Just before I let you go, I know it's a bit of a crystal ball gazing, but your own assessment in terms of for Naukri this year is going to be flat to slightly negative, and when do you see the recovery when it comes to IT hirings? Do you think it'll bounce back at the start of next calendar year, or realistically we should expect that maybe by mid of next year we'll start things stabilizing a bit?
Very hard for me to say because the IT market is more indexed to what happens in the US than to what happens in India. So we've seen, on the ground, what we can see is that, the global capability centers, they are growing. The number of centers are growing, and the headcount per center is also growing. But that's a very tiny part of the entire IT piece. Indian IT services companies have been hit very badly, especially the large ones. And in our senses, that they had overhired last year because last year was boom time for IT hiring. And they're slowly sort of getting back on track. And a lot will depend on whether they're able to win more projects going forward, and they've been publicly talking about a strong deal pipeline, but that has to translate into hiring on the ground. Many of them are actually not going to campus this year to hire, which actually may work to our advantage in the medium term if the market bounces back, because they'll have to hire laterally, which is where we play a role. But fingers crossed when the market will come back. We have no way of knowing when that will happen. Now we are all expecting and hoping that it'll happen sometime in the next 3-4 months, because it's been quite some time since the market slowed down. And normally what we've seen is that India is actually part of the solution. It's not really the problem. When companies want to cut costs in the US, they end up hiring more in India. And after every slowdown, normally we see a very sharp recovery after 3-4 quarters. But till it happens, we don't know. We can't be sure.
And I have to ask you, Zomato has already doubled, almost tripled this year. Any temptation to sell some stake?
We are long-term. We've been believers in the Zomato and Policybazaar story. We've been investors in these companies for almost 15 years now. These companies continue to execute strongly. They're both gaining share. They are both inching towards profitability. We are still very, very bullish on these businesses.
Okay, Hitesh, on that note, we let you go. Appreciate you making time and speaking with ET now.